Hi, it's Amanda DeVito Parle. Welcome to my podcast, At the Kitchen Table, where we will guide, inspire, and connect.
I'm Amanda DeVito Parle, here at RE/MAX Alliance with the DeVito Dreammakers. So I'm here with my friend Michele Beeson. Michele is a mortgage lender, and she writes home mortgages for consumers mostly. I'll let her tell you a little about what she does, but I wanted to talk to Michele today about the changes in the mortgage industry. Wanted to talk to you a little bit about your grind, your hustle, your grit. You know, you're an athlete, you're a successful business person, and I admire you a lot. So I'm interested to talk to you and just know a little bit more about you and your business and the business of lending. So tell me, why lending? How did you get into this business?
It is an interesting story, actually. So this is my second career. My first career was interior design. And I did that for 15 years. And one of my clients was the president of the company I work for now.
Okay.
And interestingly enough, I've been in customer service since I was a kid.
Yeah.
Paper route at 15 years old kind of thing. And so at the time, the president of HMA just kind of said, would you ever be interested in loans? And I said, you're crazy. And he said, people don't have enough service experience in doing mortgages. Kind of intrigued me. Was at a point in my life, needed to change, and I took the leap.
Yep.
Best decision I ever made.
What year was that?
2010.
2010. So the market was not easy.
No.
Then.
So I got a lot of, why are you doing this?
And so what was some of the, pitfalls that you stepped into early in your business? How did you land on your feet in the business at that time? And what do you feel like propelled your career?
So it's interesting. I've had a lot of this conversation recently because of your side of this and what the changes that are going on with you.
Sure.
But at the time in 2010, as you said, it wasn't the easiest thing.
I think when she says me, she means the changes
The
of
changes
the broker,
in real estate.
the real estate brokerage part of the business
Yes.
has changed. Sure.
And at the time, I didn't know any better, right? In 2010 and short sales, foreclosures, all that good stuff. And the nice thing is for me, I was a salesperson.
Yeah.
I wasn't really a mortgage person, right? So I could take my sales experience and really just work on relationships. And that was the best thing I could have ever done coming into the industry. At the time, I thought, how do people not think this is a sales job? Mm-hmm. And it definitely was my secret weapon at the time in building those relationships, whether it was with realtors, financial planners, whatever it may be.
Yeah.
The hard part about it at that time was just learning all of that. But again, not knowing what it was before was to my advantage.
Yeah.
For sure.
So you land on your feet in real estate, and where were mistakes along the way? What did you do that worked for you? What didn't work?
First couple of years, it was all about networking, right? Because I just didn't know any different and needed to meet people. So I joined a lot of different, the real estate associations, and I did a networking group called BNI. And that was a big part of that. And my big success with that was just leadership. So I was president of my group. I was vice president. I was membership committee, so on. And just taking a big role in developing that networking group. All small businesses for the most part, right? So for me, I was all about one-on-one relationships and just being able to have that more intimate experience. And that's what works for me. I had joined like the chamber and things like that, and I quickly narrowed it down and only did the networking group because I saw the same people every week.
Yeah. And then the technical part of the business seems like a hard part of mortgage lending because there's a really broad technical back end. What is that like?
Yeah, a lot of facts. I mean, mortgage guidelines change all the time. The basics of them are still basic. I mean, when it comes to conventional FHA, VA, the loans that have been around for a long time, that part of it, it's just a lot of working in it day to day, right? The other side of the technical part is the processing part of it, right? Like just working with your clients to have all the documentation needed to be able to demonstrate how these people are going to pay their loan back, as an example.
Yeah.
So there's kind of two sides to that. And the nice thing is we have a great operations team to do a lot of that. But
in that technical piece of the business, some of that is changing in the industry right now, right? So the basics of a mortgage, if we can just step people back, are principal, interest, taxes, and insurance. Mm-hmm. And then I want you to talk a little bit about like sort of the basics or the fundamentals of mortgage, how CMG has changed the company that you're working for, how they have changed that, and what maybe you think the future of a mortgage might look like. I didn't realize it was such a big question.
This was fun. So CMG is the bank that we fund all of our loans through. So Home Mortgage Advisors is a joint venture. So we are 50% owned by RE/MAX Alliance and 50% by CMG Financial. CMG has really taken a different approach on just what you said, the basics of mortgage. 30-year fixed is it's amortized over 30 years. You've got your principal and interest, and then you typically have an escrow account for your property taxes and insurance. Where we're going is really having discussions more on a financial basis, not just mortgage, but like, what does that really do for the buyers in our market now and their buying power and so on. And one of the big advantages CMG has is our all-in-one product, which is proprietary to us, and it enables us to look at it differently. It's just a different way of calculating interest. It is not for everyone, but it is another option, which I think I love after 14 years of being in the business. It's just nice that there is another option. We want to creative's not the right word, but you want to be able to work with a buyer and solve their problem the best way for them to be successful. And all-in-one just looks at principal and interest differently.
It also looks at your idle cash differently.
It does.
So let's just throw a quick example into this conversation, which is, let's say you have $1 million house value. CMG will do an all-in-one product for you in an $800,000 loan amount, right? Which is 80% of the value of the property, right? So that's the
Correct.
Typical sort of 80-20 you're used to.
Yep.
And so up to $800,000 in a loan. But let's play the scenario in which you own or you're preparing to buy $1 million house. You could own the $1 million house or preparing to buy $1 million house. And you set an $800,000 loan up on the property through CMG in this all-in-one product. But let's say in the example, this particular consumer also keeps $200,000 in idle cash in a savings account. Yesterday, you paid mortgage interest on $800,000 and you sat on $200,000 in idle cash. Tomorrow, or now, in this all-in-one product, you're paying interest only on the difference. So you're paying interest per day on the $600,000 difference. And this product is really powerful because it puts your idle cash at play against your mortgage balance. And so what is the compounding effect, or how do you teach people to throw out everything they know about a straight line amortization to understand this product better?
For sure. And it's not easy. I mean, I've now had the privilege of being able to educate people on it for about 2 years. And people know what they know, right? Our parents taught us that we need to save cash to then pay bills, and their parents taught them. So it is hard to kind of get your head around a totally different way of thinking. What has been successful for me is introducing it to someone that qualifies for it. Not everybody does, but when you do, are you interested in paying down your mortgage quicker? Are you interested in having access to the equity in your home? Are you interested in having a lower monthly obligation? Different things like that. You then walk them through the benefits of the loan. I am a big fan of doing all of that face-to-face at a minimum over Zoom. It is complex enough that it's hard to understand if you don't. Everybody gets a 30-year fixed, and that it's amortized over 30 years. All-in-one is an interest calculation every day. So to your example, you put $200,000 in the account, which it's attached to a bank account, which then applies to the principal, and your principal is lower for however long. Well, that helps that daily interest calculation. That's kind of hard to grasp sometimes without seeing it, right? So I've had really good success with just being able to do it face-to-face, and it's multiple times. I mean, who are we kidding? It's not always on the first conversation because it gets people thinking, and then they're thinking about their household and what else they could do with this account. And I could buy a rental property, I could pay off debt, I could do whatever.
Right.
And so there's always a second conversation because they have had time to think about it and what I'm going to do with it. But I think it's spending the time is the biggest thing. It's not a quick decision. You've got to take time to talk about your life and your spending habits and your budget in order for it to be successful. And at a minimum, make a good decision.
Yeah. The biggest pull to the product for me is that oftentimes, particularly in the last handful of years in this real estate environment where people have a lot of appreciation in the past few years, their home's equity is locked up in their home essentially. And this all-in-one product frees their home equity to them. So it's basically an escalating and falling revolving line of credit. It's a first deed of trust line of credit amortized in a 30-year AM, and it's good for 30 years. So typically people who are familiar with a home equity line of credit product know that in 10 years that home equity product goes away. Or in a traditional mortgage is 30-year mortgage. So it's a 30-year first deed of trust home equity line of credit is how I describe the loan, which is a hard concept, but it frees up your home's equity. And that plays into the point where people can take that money now and go buy a rental. Take that money now and maybe go pay down a credit card or do something else with the cash that they've wanted to do, buy a business or invest or do something different.
Beautiful thing is you don't have to ask permission for all of that, right? You can put money into the mortgage towards the principal anytime you want, any amount, any frequency, but you can also take it out at any time, any amount without having to refinance it. So to your point, every conversation about that loan is different because everybody has different needs.
Yeah.
You know, medical bills, it's kids' tuition, whatever it may be. And you're always comparing it to the market rate of those things, right? It's a financial tool.
Yeah, it's such a fabulous product. Okay, I want to move on to another product that you have, and I want to learn a little bit more about this. It's called Home Fund It. Talk to me about that and why that could be an interesting product for maybe an entrepreneur or somebody who works in and around the spaces that you and I work in and around that might have a college-bound kid or a college-bound nephew or somebody they care about college-bound. So talk to me a little bit about Home Fund It.
Yeah, Home Fund It, totally other end of the spectrum. First-time home buyer product only. And think of it as GoFundMe for your home. So it allows someone who just graduated college, for example, and they're just getting out into the world, and it allows them to use it as, hey, if you're going to give me a graduation gift, why not help donate to my
future down payment.
my future down payment of my house. There is no maximum on it. So, I mean, a young kid could have 20% down, right? Or 30 or 40, but 5 would be good. But it allows them to be able to get those donations from people, and anybody can donate. So that's, it's kind of that fun social media part of the world where they can share it all over the place and anybody can help them donate to it.
With like a QR code or something?
Yeah.
So you set up a QR code, you give it to all the aunts and uncles.
Right.
And you say, instead of sending graduation money or instead of sending wedding money,
right,
you could send a gift to our Home Fund It account.
Yep. Wedding gifts is another big one, just because, some people are getting married later and they have a lot of the dishes and, typical things. So it's kind of like, why not donate to me buying a new house?
Yeah, instead. I love this product. Okay. So the contributions that the giver makes, are they just regular gift money, or is it,
so
do they get a tax break on giving?
It's an interesting thing. It is not like a typical gift you would give. So, I mean, in our world, there are times where a parent or a grandparent will give a gift to a first-time home buyer, right? Totally different. And that's an IRS
gift.
Right.
Yeah.
Where this is not that. This is a product that has been developed to enable people to give a donation outside of that. It also has a benefit where we, as home mortgage advisors, give them a match up to $2,000 towards closing costs. So it's really kind of a no-brainer. Even if they don't accumulate a lot in a matter of time, it's still worth doing. I mean, even if they just had $5,000, right, towards buying a house, well, it gives us then the ability to give them $2,000 towards closing costs.
Right, so long as they collect up to $2,000 in the Home Funded account, you'll match their $2,000. Right.
So, I mean, it's just, again, it's a really good tool for those first-time home buyers out there that maybe they're a little skittish of doing it right now. It enables them, well, if you're going to wait a while, let's do this. Try to get some donations in a few months or whatnot.
It sets up like a bank account also, right?
It does.
And so a young person could be using their Home Fund It money as just a savings account?
Yes and no. So, I mean, you are right. It is their money. So if in the event they never purchase a home, they can take it out. There are added benefits to the Home Funded account that are, if you share it on social media, you can build donations through that. That is not something you would be able to get back if you didn't purchase a home. There are shopping benefits. So if you shop at Home Depot all the time or Target or whatever it may be, and your mom, every time she shops at Target, can donate a portion of that to this Home Funded account. So there's all kinds of like unique ways to build the amount in that account.
Right. Yeah. You sneak money into your
Yeah, I mean, it's
home
great.
fund.
And especially like if you're young and, just starting life or you're newlywed or whatever, it's just an awesome opportunity to build that without having to use your own savings.
Well, and so often I hear people say like, oh, I don't know what to get this person, or I don't want to just give them cash because I'd rather give it to them for a purpose. And so this gives people an opportunity to maybe set a home funded account up for somebody that they love to give the money some purpose, right? So I want to talk to you about sort of the changes in the mortgage industry and shift gears on you just here for a moment. The interest rate environment has been just sort of an interesting roller coaster. We ran a 10-year cycle where the Fed basically held the Fed fund rate at 0. And today the Fed fund rate is at like 5.25 or something like this. And we are heading into a time where interest rates are going to be flexing again. What does the long-term market look like in terms of interest rates? And where do you see that going? And what are your bold predictions on maybe the next 1 year in financing?
Well, as I like to say, my crystal ball is a little cloudy.
Yeah.
But the good news is I do believe, we will see some change in the next year, which is good, and they will decrease a little bit. But it's hard to predict I don't know, it's such a hard question too, right? Because in our world, I never want to discourage anyone from purchasing now.
Yeah.
And interest rates will change. I mean, if you are better off purchasing sooner than later to then adapt with the interest rates. Interest rates, there's always a way to change that in the coming year. And I do think that they will go down. How much? Who knows? The Fed changes their mind all the time.
Yep.
But I think we're in a time where interest rates are actually more normal now than they have been in the last 5 years. We've been very spoiled. And having been in the industry 15 years, I don't know that I saw rates this high ever in the last 15 years. So my hope for people is just more talking about it as, don't let it scare you, right? Like, let's have a conversation about how we can get you in. There's so many different ways to do things now. Even if interest rates are 6.99 today, there's buy downs, there's temporary buy downs. There's just so many ways to get you into the home to then be able to adapt the interest rate later, versus if you wait and interest rates go down and prices go up, the competition is so much worse. Why not have an advantage now? And I know that's hard because we don't know what's going to happen in 6 months, but it's hard not to live in the moment and want to get people into homes now.
Well, and it's interesting because we know the statistics around home ownership. And I think I had recently heard a stat, something like if in 1990 or maybe in 1980, if you had waited for interest rates to come down, it must have been like 83. If you had waited for interest rates to come down, you would have waited 21 years for the rates to offset. And so, that's just too much time. It's too much time to wait. So it's like in anything in life, like having a baby or, maybe not getting married, but the other big life decisions, it's like there's never a right time, but you just have to kind of dive in. Yeah. And so, here we've already talked about some of these little products that like all of a sudden there are just so many different opportunities in the lending space where you can get in and buy, and you just shouldn't wait.
And that's the thing. You hear me talk about this all the time, but I am always a big advocate of it is never too early to talk about it. You could we could talk for 2 years and I'm okay with that. If it meant that we got to talk and make a game plan for those 2 years, right?
You mean building a strategy for somebody to be able to
there's
buy.
There's so many people, they're scared, but if they have a conversation and we have a game plan, it's kind of like, well, how can you be scared if you don't know what it is, right? Like, let's pull credit and let's see. Yeah, I'm a huge fan of that because a lot of times you get them organized or just give them some sort of game plan and it never fails. Then they're excited. They want to look and they're under contract in 6 months or whatever.
Right.
But it's more just letting that guard down and saying, there's no obligation. Like, let's just talk about it so that you can understand what your options are.
It's interesting, just the benefits of home ownership are enormous. We know that the average renter is worth something like $4,100. The average homeowner is worth $187,000 because of their home's equity. We are well aware that owning is by far and away a great advantage. And then, of course, I see some of the other threats coming down the pike, which are things like if we, the regular folks, don't buy houses, the hedge funds, BlackRock, Blackstone, and other venture capitals they will buy them out from under us. And so that's part of what's continuing to raise prices. So talk about, how are you handling just these, what feels like really high prices and high interest rates together?
Sound like a broken record, but I have a hard time not doing like just day to day, like client by client, because I can't control the prices and I can't control the rates. So in some respects, I just have to problem solve each person at a time. And I know it might sound, well, it's what I do, because it's the only way I know how to make them successful and not dramatize it, right? I mean, it is what it is, so we got to figure out a solution.
Correct.
So yes, it's hard, and maybe it's not the right time for them today, but if we talk and we can make a game plan and figure that out, I think it's huge to be able to work with you as an agent and be able to say, this is what we have. Like, how are we going to make this successful? Depending on the situation for the person. So I know that's an interesting answer in that. I really do. I mean, it's case by case.
Yeah, case by case, no better time than the present.
Right.
And so your approach actually is that you really love to just get together, sit down, do a consultation with people. I think that's true when they decide they want to buy a house, that you've got to bring people in and do a consultation on the lending piece, bring people in as I do and do a consultation for them on what and where to buy, how.
Yeah.
And so then sort of together that gives people the confidence that they need to take that leap and go get it. And so what else are you seeing in the mortgage space that is changing, or other bold predictions? What else are you seeing out there in the marketplace right now?
We see a lot of unique situations now where people are getting creative in that they're purchasing with other people, right?
You mean like with their parents or with their grandparents or with a friend?
Like just being able to consolidate and find something because they don't want to pay rent anymore. I think we'll see a few more unique products in the future. That's part of what I love about CMG is they're always looking to solve a problem.
Like what? Like a 40-year amortization? I
hope not. But right. But Home Funded and All-in-One came from those spaces, right? Like Home Funded is a solution for those first-time home buyers, right? So I see that happening in the coming years, because if rates don't go down fast, which we don't know.
Yeah, your crystal ball's leaking.
But, even if it's a 6 by mid next year or whatever, that's great. But that's still, we have no idea what that does to other people, right? I mean, every buyer is a unique situation in that, right? We don't know what it'll do to the rents or the prices or whatever. So to me, it's always a different problem. Yeah. But I think gift funds are much more common than they used to be.
Why do you think that is?
Well, because they're looking to, again, solve a problem in that they might want a higher purchase price but a lower payment. Or, mom and dad want them to live in a safe place or safe area, so let's increase the purchase power somehow. But they don't want to co-sign. There's different aspect to just the estate side, right? And what people do with that. I know enough to be dangerous enough to say, you should consult an estate attorney and a CPA and different things during a transaction. But, parents want to be able to give when they can, and I think that's a much more common thing to do. Yeah. Or buy together.
Yeah, I feel, I don't have any good statistics around it, just feelings, but that, I'm seeing many, many more parents and grandparents step up and give gift funds to young people in exchange for paying for an expensive wedding or in exchange for paying for expensive college.
Yeah, it's interesting. I think people are giving inheritance sooner, while they're alive.
Sure.
Which I think is great.
Yeah.
Because if you think about that, why not provide a down payment to your children and see them happy while you're alive versus... Yeah. So it's great because a lot of people are thinking about it as more like solving a problem. How can I help?
Well, and I think a lot of people are afraid to ask their family for money when they shouldn't be. I often have people at this very table where I'm consulting with them and they don't quite have enough of the cash together to pull it off, except they've always surprised themselves where if they go to a grandparent or a parent and say, hey, I'm trying to buy a house, is there an opportunity for me to either borrow some money and pay you back or to get a gift? That the dream of homeownership is so elusive right now that I think the generations ahead are excited for that to be the thing that you need help with, that they would often agree. Yeah. So I'm getting that a lot where it's I couldn't ever ask. And I think it's fair to say, over a lot of people say like over my dad's dead body was he giving me a down payment, But I think that generationally that mindset has shifted.
I do too.
And I just think the shift is in young people too. They are like, I don't need a $70,000 wedding. I'd rather spend $70,000 on a down payment. And I think that's a good mindset.
Yeah, there's something about owning that asset, right? And I see it a lot more young people getting into a home, planning. Again, maybe it takes a couple years, but they want the plan. They want to own a home.
Well, that's because at some point our instincts are good. And when you've been told to own nothing and that you'll be happy, I actually think that young people are beginning to figure out that that's not true. Rent a dress, rent a scooter, rent an Uber, rent a VRBO, rent a purse. And so all of a sudden people are like, wait a second, not owning anything doesn't make me happier. And so when they figure that out, I think the minute they have that mindset shift of, owning these things and valuing them and rooting down in them makes me happier, people begin to find the way. Mm-hmm. And so, I'm always trying to get people to you and our mortgage partners to find the way, because if you can own something, it's a really good feeling.
Yeah. It's a great part of your investment portfolio. And I think it's...
What markets are you watching? Like, what indexes do you watch? How are you paying attention to the market? Where do you take in your data and information from?
As you know, I watch the CMT, which is the constant maturity treasury, on a daily basis, and that's purely for all-in-one, because that's what the index is based off of there. So I look at that. Fed rates on a daily basis we're looking at, but honestly, I take in my information purely just through our channels and what they're feeding us. So, CMT is what I follow every day.
Are you watching the stock markets? Are you
I really don't.
Okay.
Yeah, and part of it is, I'm married to a husband that he watches it every day.
Does he? Yes.
So I get funneled the information more so through him. But it's honestly, my entire career I've been like this. But my day-to-day is more about the people than the numbers. Mm-hmm. And whether that is good or bad, I can't complain about my success, so I'm happy with it.
Yep.
And it makes me happy because I'm more concerned about the person. And I try not to get jaded about that stuff. It happens. The stock market happens. The rates happen. Mm-hmm. I watch it. I know what's going on a day-to-day basis, right? But at the same time, the media, and not to get too far in the weeds, but like advertising of rates is hard to watch, right? The general public can see things better on a daily basis. But at the same time, is that yours? So I am probably a little too case by case, and I don't look at it as often on a wider scale.
Well, you get to spend lots of time with that really smart husband of yours, doing lots of outdoor things, and you're in business together now, I understand. So talk to me about how your business has grown and how you decided to have Tony join you in the business and what that's done for your business and your small little entrepreneurial team downstairs.
When we were acquired by CMG 2 years ago and the all-in-one product was presented to us, my husband Tony and I were like, this is the loan we wish we would have had.
Yes.
And for him as an engineer and just math-based, right, it was the product that we became passionate very quickly.
Blew his mind.
Right. It's great. And again, not for everyone, but it allowed us to learn it much quicker that way and realize the potential of just educating people. I have since taken that to a level where I have a continuing ed class that I am now certified in because I want people to know about it.
Yeah.
If for no other reason than to make a choice, an educated decision, whether it's for you or not, right? You should see it. And with that, we've grown the team on multiple levels because we still have every other loan, right? But we want to be able to expand that. So we've added other people to the team and continue to add. And, in the Arvada area, we have a lot of potential just with my 3 offices. I have the RE/MAX Alliance, Arvada, Old Town, and Golden offices. And so I just want to make sure that we are providing enough support for everybody. So we're up to 5 people on the team, which, we just want to make sure, everybody has what they need and we get to spend the time with our clients that we need to.
You get to spend time with your clients and you get to spend time with that handsome man. So congratulations on all your successes. Michele Beeson at HMA. Tell us how somebody can reach you.
The best way to reach me is my cell phone is 303-903-3214. Or you can email me at Michele with one L .B at hmaloans.com.
Okay. Well, I appreciate your coming on and congratulations on all your success.
Awesome.
And I so value our friendship and your advice and your
this is great.
financial mind and being able to kick stuff around with you. So thank you for coming.
You're welcome.